Hi, good evening, everyone. Welcome back to the channel. So this is going to be a quick one this evening. This is going to be a simpler options trade for anybody that's new to options trading. This is going to involve basically a sample trade that I've been tossing around out there. This involves Chipotle stock, which my thesis is that Chipotle, like the entire market, will recover. Not only recover, but probably hit new highs by the end of the year, as it's pretty much at all-time highs. It's either at or close to all-time highs right now. So my thought process is that, obviously by the end of the year, we're going to be even higher. So when it comes to Chipotle, I personally feel like it's been drastically oversold. I feel like, it's been dropping because the CEO said something about tariffs and was concerned about same store sales not being able to be as good given tariffs, which I'm not sure exactly how he feels that's, going to affect the business. But I think that the fundamentals are drastically separated from that comment. And I just think that it's been drastically oversold. I think it's a great company, great stock. So as I'm looking at it, and I have basically done this trade myself, but this is for somebody. This example I'm going to show is for somebody that has maybe like say 80,000 to play with. Basically, if they have that much, they can do like up to 20 contracts on Chipotle, which are put contracts. So let me go into where I have it saved. So in the Discord, I've been trying to get a little bit more engagement going in the different income threshold chats that I set up for options income. So what I did, and a lot of people are telling me I have like too many tabs open or too many tabs like created in Discord. But what I did, I've created basically 25K a month, 20K a month, or I'll go this way. I started at 2K a month, went to 5K, then 10K, then 15K, then 20K. And the idea was to have some interaction for people that are making that much trading options. So I put a trade idea for starters in there. So this would consist of basically selling puts on Chipotle. If you had $80,000, say, in cash and you wanted a better rate of return, this was the trade basically as of um, Friday evening. Um, it would have been, and it's moved a little bit today because the stock was up today. But let's see, CMG. So we went up about 81 cents. So the trade's not going to be as high. But if you were to sell 20 puts on Chipotle, which would basically control 2,000 shares, the assignment risk would be 2,000 times the strike price minus, well, so as you all know that follow me, I go a few dollars out of the money and I go out in time horizon to take an extra premium. So it's 45 times 2,000 basically. So it's really 90,000, but then you subtract the 13,200. And so you only need to be able to pony up 76,800. And so the risk is that you'll end up owning Chipotle, which I think is a great company, at $45 a share. So I call this a little bit more conservative because it's not a leveraged ETF. It's not any kind of, directional ETF or anything like that. It's just a good old fashioned growth stock, which I personally think is a great company. So you would take in 13,200 in premium for basically 3 months. And then I tried to guesstimate on the call side if you were to do the full wheel and get called away. I picked 40 because obviously, we're expecting it to move up, but ballparkish, if this was assigned at like 45 and you did calls when it got there, this would ballparkishly be about what you would expect to take in $6,000 in premium. So, you would sell to open the calls, the 20, and then basically you would take in $19,200. And then you make that basically wheeling Chipotle stock. And then, as they say, rinse, repeat, do the strategy over again. And then after that, you've grown the account basically almost $20,000. So now you have even more money to wheel with. Then once you've gotten started, you've gotten your feet wet, you might want to go into some leveraged ETFs like NVDL, AMDL, or more stuff like what I do. But anyway, I just wanted to put this out there as a quick, like simple options trade example. And as the thumbnail says, eliminate NAV erosion. That's what we're doing by trading options. We're countering our NAV erosion because the fund managers haven't really been able to fully do it for us. So we kind of have to take actions into our own hands. And so we're able to trade options for premium to basically mitigate, if not completely eliminate, nav erosion. So anyway, that's just a quick 5-minute video. That's all I had the time for right now. Wanted to get that out. Thank you all for tuning in. Let me know in the comment section what you all think. Please remember to like that comment or smash that like button, comment and subscribe, and join Discord. And we will see you all very soon. Take care. Have a great evening. Bye.